Hello everyone, welcome to the ichimokucharts.com daily analysis for the Aussie dollar US dollar FX for Monday, July the 2nd, 2012. Well, a continuation of the trend to the upside today, a candle with a higher high and a higher low. Previous day's trading, we had a very large white body candle with the buyers in control of this market, showing very strong upside momentum and a bullish breakout up above the Kumo or the cloud to give us a bullish signal in Ichimoku charts terms. Today we've seen some capitulation above this area of resistance at 102.18, testing up to around 103. A small black body candle denoting the sellers making net bearish progress following this very large amount of bullish progress the buyers made. And it does set the market up for a potential change of trend. It's very similar to a hanging man type pattern, not quite perfect. We have a bit of a shadow on the top, and the bottom shadow is not quite twice the size of the body of the candle, but the effect of this type of candle is the same. It is still offering itself as potential for a change of trend back to the downside, and that's basically because of the small black body, the large reduction in the size of the body. So whereas the buyers were making solid net bullish progress, today all of that has evaporated. Now, there is very solid support at the 102.18 level that was previously strong resistance for this market, and then prior to that was strong support, and now we saw today that there was upside price rejection from there where the sellers lost commitment around that level. So there is still potential for this market to trend up, and that will be crucial to any potential change of trend. If we do see a change of trend, we have strong support down below at the top of the cloud, which is down around 101.63, and then just below there a very solid area at 101.44 for support. To the upside, strong resistance at 103 as I've mentioned, and then no solid resistance until we trade up to around 103.77. In terms of the Fibonacci extension, and we're looking at the relationship of the current uptrend that the market's in to the prior time the market was trending up, and the previous day's trading we saw the market take out all those important areas in a very bullish manner, but we saw some price rejection as the market traded to the 78.6% level, and that's a minor level, but we are seeing price rejection from above that area, and once again today the market's failed to close above there, so that does set the market up for a potential change of trend to the downside. And looking at the Fibonacci retracement of the prior downswing, and we've seen the market close up above the 100% level in a bullish manner. We don't have any targets until we trade to around the 161.8%, around this 103.80 level, and whether the market makes it up there in this first time frame uptrend is doubtful. There is still a possibility we could end up trending up. If we do see some bullishness, some strong bullishness above the highs today, then we could end up trading up above there over the next few days. Now, in terms of Ichimoku, we have a bullish market in all three timeframes, very similar to the equities market where we've seen this solid bullish breakout up above the cloud. We're now seeing a hanging man type of pattern and potential for a change of trend back to the downside, but very solid areas of support. The market is bullish in the long-term time frame by trading above the cloud, in the medium-term time frame by trading above the Kijun-sen, and in the short-term time frame by trading above the Tenkan-sen, and the Chikou span is above the corresponding price action and a fair way above, so it's confirming this bullishness that we're seeing in the market. So at the moment, with this bullishness and this buy signal that we saw above with the breakout above the cloud, it wouldn't surprise to see the market relax somewhat. We have had a very solid bullish day on last Friday for the close of the week. We are now seeing the market find some support down around 102.18. If this market does come off, we have very solid support at the top of the cloud, and it wouldn't surprise to see the market bounce off these levels and trade higher. If we do see the trend continue up, obviously 103 is an important level, and then we have resistance up around the 103.77, which coincides roughly with that 161.8% level on the Fibonacci retracement.